Let me share with you an example of how important is money supply. Among the monetary policy, the biggest move is money supply. Let me share with you, this is S&P 500 index. This is during COVID-19, 2020 here. During this time, there was a COVID crisis. Here is where the US government introduced a lot of stimulus. And remember, starting in the 2000 financial crisis is 700 billion. This one is $8 to $9 trillion in stages. Can you see the difference? It's huge. On top of that, the other central bank also introduced more money supply. And let's look at what does it mean here. This is where the Fed announced unlimited QE. What is QE? Quantitative easing. Easing means you add money supply or you reduce interest rate. You want to activate the economy. Let's look at what happened here. The stock market went up. S&P 500 index to go up 145 is very significant. Normally you have S&P 500 growing only 12% per year. This is 10 times. Is that significant? You see, if you don't understand this, when you read all the news, what do you read? You read about all the pandemic, right? Coronavirus graph, how many people were infected, the graph keep going up. Will you be concerned to invest in the stock market? If I have not gone through understanding the various monetary stimulus, I may not have the conviction this time. But the good thing is, I learned from all the past crises on how the US government and the central bank does this, and I was able to capitalize on this. And the reverse can happen at the end of the 2021 is where the inflation starts to become very severe and the Fed has to increase interest rate. So this tightening, right? Then the stock market actually went down 36%. For an index to go down 36% is high. This is crisis level down. So is it important to understand money supply? This is where it will make you great money. So if you don't understand it, you will be holding on to your stock. Okay? Or you don't have conviction. So what does understand all this macro help you is to have what we call conviction. What is conviction? Confidence to enter when there's a lot of fear. All the news you read is bad news, okay, about the economy. So one thing that you need to write down is this. The stock market is 6 to 9 months ahead of the economy. So don't look at the economy to see whether you want to invest, right? The market is forward-looking. So that's the money supply. The next big movement is interest rate. Every year there's an 8 FOMC meeting to decide on the monetary policy, right? But 4 times a year is where they do projections of the future. Right? The rest of it, they don't do projections. They say raise interest rate or lower interest rate or do nothing. So a lot of people thought that it is whether they raise or don't raise that moves the market. It is not true. The biggest mover is in the projection, right? What they project next year. But this can change. Every quarter, they will go up or go down. So that's where you need to understand the dynamic nature. The other one is the conference call. After they show whether they increase or they reduce interest rate or stay flat, then there's a projection material, which we teach our students how to read it in our macro insights course. And after that is the Q&A with the Fed, Jerome Powell. So during that, people will fish from him how fast he will reduce interest rate. Okay? So the way we approach as a big picture, this is for experienced trader. When you're experienced trader, that means you already handle the basic, then this is how I look at it. I look at the macro, based on the macro and the mega trend, what industry is the best, right? Then I look for the leading stock in the industry, right? Then I can get the biggest mover. But then how do I trade? You still need a trading style, right? So you would choose, during volatile period, you can do intraday, you can do hedging with options, right? Or you can use option strategy to ride the trend with limited risk. Options as a way to limit the risk. Or you can use a combination of this. Okay? So first, you need to have a strategy first. Right? This is also adaptation, also based on your experience. If you are new, at least you need to learn one of these first. Okay? Then last but not least is, once you have a clear strategy that you can repeat. Remember, Brad Steenbarger said you need to have a methodology, right? So if you don't have one, then this is where you need to start learning one, right? So we do have a course called Versatile Trader Package, like Investing Swing Trend Intraday. We have a very clear systematic process map. Okay, so we have a process map for each. That means you follow the steps. Clear entry exit rule, clear money management rule.